This is 2018 question 9. It's a budgeting question and it is a cash budget. So Jack Manning has the following assets and liabilities at the 1st of the 1st 2018. So this is how the land lies at the start of the year, the 1st of January 2018. He's got fixed assets of €305,000, stock of €32,000, cash €31,200, and that cash figure there is actually going to be our opening cash figure. He also has debtors of 82,100, and the debtors figure is going to be going to the first month of money coming in. Okay, so we are owed €82,100 from sales that took place last year. So we are owed that money and we're going to be paid that in January. So that 82,100 will go into January's sales. Okay, so there are two things now that will have to go into our budget. In liabilities, we have creditors of €50,300 and we also have capital of 400,000. So the creditors, €50,300, similar to the debtors, that is going to go into our January column for purchases. So we owe 50,300 to our suppliers from last year, so we have to pay that in January. So the 50,300 will go into January. The capital figure then, the 400,000, that will go into our balance sheet. Okay, so that €400,000 will go into our balance sheet as our capital when we have to do our balance sheet as part of this question. Then it says the expected sales and purchases for the next 5 months are. It gives us a figure for January of 44,200. This is for sales. February 89,400, March 88,100, April 57,900, May 81,600, and that gives us a total of €361,200. Okay, so January, it says down here in the first bullet point, this is where I'm looking, all sales are on credit and are paid for 1 month after sale. Okay, so January will end up going into February, February going into March, and March going into April, and so on. Okay, with the final figure, May, if we're paying for things 1 month after the sale, we will only be paying that €81,600 in June. So therefore that will be my debtors figure in the balance sheet. So debtors in balance sheet. Okay, so the last month will be my debtors figure in the balance sheet. Okay, because I won't be paying that until June, and we are asked to do a balance sheet at the end of May. We then have our purchases, a row of purchases figures. So this is it here. With January, we have purchases of 48,100, February 48,200, March 42,300, April 34,700, and May €34,500. And that gives us a total then of €207,800. It tells us below, all purchases are on credit. Okay, so they're all on credit and are paid for 1 month after the purchase. Okay, so likewise, January will go into February, February will go into March. And I've already said that the 50,300 from up here will go into our January purchases. Okay, so it says except for €28,000 for cash in April. So we need to be careful when we get to April. Okay, so just make sure you put an asterisk beside that or something so that you know you need to be careful with that. Next point, Jack rents the premises for €42,000 per annum, and that's payable monthly. So in total it costs him €42,000 for the whole year, but he has to pay it monthly. So you're going to have to find out what the monthly charge is by dividing it by 12. Equipment will be bought in March for €6,000 cash, so you'll have to put that into March. However, you also need to remember that equipment is a fixed asset. So when you're doing your balance sheet, down here you're asked to do a balance sheet, you need to make sure that you're including that new piece of equipment. Wages per month will be €16,400, that's going into each month. And closing stock at the end of the year is expected to be €29,100. Well, why are they telling us that? They're telling us that for the balance sheet, so that will go into your current assets in the balance sheet. I'll just write that there beside it. Current assets in the balance sheet. Net profit for the 5 months is expected to be €51,000, and that's also that will go into the finance buy in the balance sheet. Okay, so we're asked to do 3 things here. Prepare a cash budget showing Jack Manning's expected monthly receipts and payments for the 5 months January to May 2018, and also the total column for the period. Prepare a budgeted balance sheet at 31st of the 5th 2018, and last part there, a small theory question, outline 2 benefits for Manning in preparing a cash budget. Okay, so this is the solution for the cash budget. You need to have a column for each month, so January, February, March, April, May, and then a total column as well. We're starting off with our receipts and then going in with our payments. Okay, so the only form of income or receipts for this business that we're looking at is in the form of sales. Okay, so we're just going to go in with the sales first. Now we know that the sales are on credit and are paid for 1 month after the sale. Okay, so at the start of the year, the 1st 2018, we had a debtors balance of €82,100. We were owed €82,100. That was paid to us in January, so that's why that's going in there. We're getting paid that amount in January. That will be paid. We're looking forward when we're doing budgeting. Then it says all sales are on credit and are paid for 1 month after sale. So the sales that happen in January, the 44,200, they will be paid in February. So that's why that 44,200 is going in there. February sales of 89,400 will be paid in March. So that's why that's going into March. And March's sales of 88,100 are going into April because they'll be paid in April. So we're showing here when we will actually receive the money. We're not showing when the sales happened. We're showing when we will receive the money. In May, we'll be paying for April sales, so that'll be the €57,900, okay? And then what will we do with the 81,000? Well, we're still owed that amount of money, the €81,600, the May sales. We are still owed that money, so that will be our debtors figure in our balance sheet. So we're adding these 5 up and we get a total of €361,700. That's the only form of income, so you just need to do a quick total, which obviously is going to be the same figure as above, 82,100, 44,200, and so on. Okay, next is my payments. The first one I'm going in with is my purchases. So at the 1st of January, we owed €50,300 to our creditors, and we have to pay that first. So that's why that's going into January's figure. Okay, so we have to pay that €50,300 before we are allowed to make any more purchases. Okay, then we are also told that all purchases are on credit and are paid for 1 month after purchase. Okay, so we need to be careful though when we get to April. Okay, so 50,300 was my opening creditors figure, so I'm putting that in there. Then January's purchases will be paid in February, so that's why the 48,100 is going in there. February's purchases will be paid for in March. March's purchases will be paid for in April. Now this is where we need to be careful, because in April we made some cash purchases. So in April we have to pay for March's purchases, plus we made cash purchases. So in April you need to pay for March's purchases of 42,300, plus we made some cash purchases of 28,000. So the total amount of purchases that we need to pay for in April is €70,300, and that's where I got the figure €70,300 sitting in there. So this will obviously have a knock-on effect then into May. So in May we would usually have to pay for April's purchases. So if you look at the question, April's purchases are €34,700. However, that includes the cash purchases that we already paid for. So we don't need to pay for them in May if we've already paid them in April. So of the total that you have there, the 34,700, we've already paid 28,000 of that. So we still owe €6,700, which we will need to pay in May. So be careful when you've got cash purchases, it's going to affect 2 months. You need to add it into the month that you're paying it and take it away from the month after. Okay, so then that allows us to calculate our total of €223,600. Our rent then is Jack rents the premises for €42,000 per annum, payable monthly. So into your calculator, if it's 42,000 for the whole year, there's 12 months in the year, which means that we're paying €3,500 every month. Okay, so 3,500 into every month, which gives us a total of 17,500. And if you were doing a budget for the whole year for 12 months, by the time you got to December, you will have paid the full amount of €42,000 off. Equipment will be bought in March for €6,000 cash. March, €6,000. Okay, and make sure you put it into the total as well. Wages per month will be €16,400, so 16,400 going into each month and giving a total then of 82,000. That will give us our total, we'll be able to calculate our total then because we have all our expenditure in. So you're adding up all of these, okay, so 50,300 plus 3,500 plus 0 plus 16,400 gives you €70,200. And you're doing the same. Okay, so 70,200, 68,000 euro in February, 74,100 in March, 90,200 in April, 26,600 in May, and 329,100 euro in the total. Okay. Next, we are calculating our net cash, and our net cash is our total receipts minus our total expenditure or total payments. Okay, so here in January we have 82,100 coming into the business. We have 70,200 going out. Okay, so we have a positive. That's good. We have €11,900 left over. In February, we have 44,200 coming in and 68,000. That's not good. You know, straight away, we're going to have a minus there. So we have minus 23,800. 89,400 minus 74,100 gives us a plus again of 15,300. 88,100 minus 90, not good. We've got a minus. We've overspent. We're spending more money than we have coming in. So we have a minus €2,100. In May, we have 57,900 coming in and 26,600 going out. So that's good. We've got a plus then of 31,300. And if you think here, in April, we ended up with a minus. Now, if we had have bought those goods on credit, maybe we would it might have affected the accounts differently or the budget differently. So after doing this budget, they might say, well, maybe we shouldn't actually go for the whole €28,000 worth of cash purchases. But you don't need to really think about that, but it's just interesting. And that gives us a total then of 32,600. I'm not sure if you can see that there. It's just a hole in the page. Okay. Next, you're going for your opening cash. Well, where did I get this opening cash figure from? That is coming from the list of assets and liabilities at the top of the question. We've got cash of €31,200. So you're putting that in there. And you're also putting it into the total. So you need to make sure you've got it in the first month and in the total. Always, always, always. Okay, so 31,200 in January and also in the total. Because this column here, the total column, is a total opening cash for the 6 months. Well, what was the opening cash at the start of the 6 months? It was a 31,200. So putting that in there. Oh, 5 months, not 6 months. 31,200. Okay, so I'm just going to block this for you for now, right? So when you're doing your opening cash and your closing cash, okay, you start off with your net cash and you add in your opening cash. So we had 11,900 and we have an opening cash of 31,200. So what is the position at the end of the month? Okay, so we had 11,900 left over. Plus we had €31,200 to begin with, which leaves us with €43,100. That's my closing cash. Okay, your closing cash for 1 month is always the opening cash for the following month. So you can see that I brought that up there. So 43,100 here is being brought up to the opening cash of the following month. Okay, so we had minus 23,800. We had overspent by 23,800. So into your calculator, you need to put minus 23,800, but we had 43,100 there to begin with, when we began the month. Okay, so that left us in a position of plus 19,300 at the end of the year. Okay, so you're bringing that up for my opening cash of the following month. We had 15,300 left over, my net cash. Okay, 15,300. And then, but I still had 19,300, so I add those two together and we have 34,600 left over. Bringing that closing cash up to my opening cash of the following month, well, we had a minus 2,100. Okay, at the end, we have minus 2,000, I'll put that over there, minus 2,100. but I have a plus opening cash of €34,600, which leaves my closing cash at €32,500, carrying that up to my opening cash for May. My net cash in May was €31,300, plus the €32,500 we had for opening cash, which leaves me with a closing cash of €63,800. Okay, and once you get to here, you need to have like an invisible line or an imaginary line there, where you kind of keep the total separate. Okay, you don't carry this up because you will have already had your opening cash in there. Okay, so then you're looking at your total. We need these two to end up being the same. So we have a net cash of 32,600 plus my opening cash of 31,200, leaves me with my closing cash that I was hoping for, €63,800. Okay, and that's that part of the question done. Next thing you're asked to do is prepare a budgeted balance sheet at the end of the year. Okay, and for this, it's just a straightforward short balance sheet. Okay, we always start our balance sheets off with our fixed assets. So we know that we had fixed assets at the start of the year worth €305,000, and don't forget about that extra piece of equipment that we bought. Okay, so that fixed assets figure that I have there of €311,000 is coming from the €305,000 worth of assets that I had at the start of the year, plus that piece of equipment, the €6,000 of equipment that I bought in March. Okay, so I'm adding those two together to give me the figure of €311,000. Next is my current assets. I'm putting my stock in of €29,100. That's given to me in the additional information in the question. My debtors figure is actually my May sales. So I had sales of €81,600 in May, but they are not going to be paid until June. So this balance sheet is as at the 31st of the 12th, 2018. So at the 31st, not the 31st of the 12th, sorry, the 31st of the 5th, so the 31st of May. So at the end of May, I was still owed that €81,600, and that's why that's going into my debtors. My cash figure then is my closing cash figure from up here, €63,800. Adding those three together to give me €174,500, and then I'm going in with my current liabilities. So put in your proper heading, less creditors amounts falling due within 1 year. My creditors, similar to the debtors, these are the purchases that I need to pay for. So I bought goods worth €34,500 in May, but I do not have to pay them back until June. So therefore, I still owe that money at the end of May. So 34,500 is going in there. I'm taking that away and I'm given a working capital then of €140,000, which I add to my fixed assets, and that gives me my total net assets of €451,000. Okay. Finance by then, we've capital at the start of the year of €400,000, and I'm adding in the profit that we expect to have this by the end of May of €51,000, adding those two together, which gives me my capital employed figure of €451,000. Part C of that question then, for 5 marks, asks us to outline 2 benefits for Manning in preparing a cash budget. So what are the benefits of preparing a cash budget? Well, first of all, it shows his surplus and deficit at the end of each month, so he can identify like areas where he might have financial trouble with money. It would help Jack to decide when a bank overdraft needs to be arranged. So he'll see, okay, well, I need to access my bank overdraft in this question for February and April because I'm going to have a minus net cash. It will help Jack to decide how to invest the surplus. So at the end of this month, or this series of months, the 5 months, we have a surplus closing cash of €63,800. So if they just leave that in their standard bank account, they might not get a very big return on that. So by having that €63,800, it would be in their best interest to put it in some sort of investment where they will gain as much interest as possible. A cash budget also shows all the inflows and outflows for the period. So if you had 3 answers there for that, that would be sufficient to get your 5 marks. And that is that question. It's 80 marks, and I think it's a very achievable question at ordinary level.